Netflix shares are down over 14% year to date, and the company is set to release their earnings after the closing bells today. So let's take a closer look at what exactly we should be expecting. Joining us now is Santosh Rao, head of research at Manhattan Venture Partners. Good to be with you today, Santosh. Thanks so much for joining us.
Good afternoon. Thanks for having me.
Let's talk a little bit about Netflix. There's so many people who have really loved the story, loved the stock, but you are on the cautious side. Why is that?
Yeah, so we believe Netflix is a long-term story. In the near term, there is a lot of volatility, there's a lot of headwind near term. So I think you have to be careful. At this point, Netflix is an international growth story. They really need to grow there. US seems to have saturated so far based on the numbers reported so far and their guidance also. So I think it's all about international. They have expanded quite a bit. They're in 190 countries. But I think it's not a sure thing yet because there are a lot of issues with that. And then also there are other issues as well as in terms of pricing. They need to raise the prices, or they are going to raise the prices gradually for people who were grandfathered in the past. So I think that's going to cause it a slowdown. And then there is just overall, I think there is some headwind for the stock. And it's not a sure thing going down. So in the near term, we expect some turbulence. But if you're a long-term guy and you believe in the international story, I think this is the stock to be in.
Which way do you really believe it will work out? Because there is also, of course, headwinds from other content players. And how does that really factor in, not even just now, but long term?
Yeah, I think competition is there. Netflix has the advantage of being a good brand. They've been there early. So I think they are very well positioned. They are in 190 countries. But I think what they need to do is localize their content, get some original content in there. There's some cost issues in terms of doing that. And there is competition. I think just the recent alliance with Comcast, that's going to help. So Netflix is doing its thing to position themselves competitively. Of course, there is Amazon, there is Hulu, and a few others who are really coming on strong. But they're still small, and they'll take some time. It's Netflix lead to lose, I would say. So I think they need to maintain that. They need to execute. They need to guide well. I think guidance is going to be pretty important, as always. So let's see where we have the August. We have the Summer Olympics coming up. So hopefully the company estimated the impact pretty well. I mean, we're expecting 3.5 million net adds next quarter. So hopefully they will meet that. But if they are below that, I think that it'll have a bad impact on the stock.
Okay, so that's going to be the guidance. Let's talk a little bit about what we're expecting to actually hear from the company as it relates to the past quarter.
Yeah, I think what's going to happen is they will say that, okay, the international rollout is going well. They're still trying to localize their content in different areas. China is still not going to be on the cards yet. India is there, but it's competitive. The pricing issue, it's going to be a phased grandfathering in or ungrandfathering in. So I think that's going to roll out. That's rolling out pretty well, not having an adverse impact. So I think what you're going to hear is that the company is execution. It's still a work in progress. There's some near-term turbulence. It's down sequentially and year over year in terms of all the metrics. So I think they need to tell the market that they have the ability to ramp up the growth rate going forward. And I think you'll see that in the fourth quarter. Really, that's where you'll see some pickup in numbers. So if you have faith in that, I think you're good. But if not, you're better off staying on the sidelines. The stock's not going anywhere till then.
Stock's down 14% or so, I believe, year to date. I'm going to check that. But the stock is down, and I'm just wondering if that news, that negative news, down 8.76, thank you, year to date. I'm just wondering if that negative news, though, is baked into the stock because, of course, the valuation, depending on how you like to invest, some would say is very high.
Yes, I think the bad news is baked in to some extent. People are expecting a slowdown. But like you said, the valuation still is pretty high. The multiples are still very high. And so it's not for the faint of heart. I mean, the company has to grow into that valuation. I mean, it has the ability to do it, but it's a show me story to some extent. They need to show that the subscriber growth is still good. US is still okay. It's stable to growing. International is growing strong. So I think those are the things that we really need to see. So the commentary is going to be very important. important. Like we saw in the last quarter, if they guide down appreciably, I think that's going to have a negative impact. But if they're within the ballpark, I think they will get the benefit of doubt, and they will go favorably into 4Q, which should be very strong.
Santosh, why do you say that this company has the ability to do it? Why do they have the ability to grow? What makes their management, their team so different than any other content producer? Because that's what they have to do and get right. Why are they? Have you met them? I haven't.
Yes, we have. Of course, gone to conferences and all that. So we pretty much know. We have been following the management very closely, and they've been executing very well. I think the issue always it is estimating the numbers is always very difficult. Like you said, the competition is coming on strong. Amazon is rolling out its own OTT products, and Hulu is out there. So there is competition, but this company has figured out how to compete. They've been there ahead of others. So I think they have the benefit of some leadership, some lead into the market. So I think they will continue to do that. But the bigger thing is they have decided to roll out some original content, which should help. That's important. The cost factor is, of course, a big factor. And the content cost is going to be a big factor. But I think that's manageable. The cash flows are improving. So, all the metrics, I think they're managing very well. The competition is there, but I think they will be able to guide through that.
I guess, Santosh, to me, what really put them on the mark was their original content, that they were so great at that. How do you, as an investor, if you're going to pay 95 times earnings, how do you have confidence that they'll continue to be able to be that great in content for 95 times?
I am with you. I am a little cautious. That's where my cautiousness comes, because content is expensive and getting the hit shows is not easy. So that's going to be dicey. I mean, a lot depends on those two factors. So that's not a given. But they are making the moves. The show that they have in France, that's doing pretty well, according to some feedback. So I think things like that, I think they need to get a few hits going. But that's, as how it goes. All these shows you're as good as your last few shows.
That's my point.
And
so it's so hard. In business, you're as good as your last trade. That's it.
Yeah. That's the thing. That's the reason for me to be cautious. I think they can do it, but there are lot of hurdles that they need to cross, and so you need to really watch that. So the commentary is going to be important, and the rollout is going to be important.
All right, Santosh, great to speak with you today. Thank you very much.